Welcome. In this video, we will analyze what is the next move for Zbcn coin. Don't forget to subscribe, like, and please watch to the end to understand. When we look at the chart from a broader time frame or a long-term perspective, the most striking structure is a descending trend line that the price has been moving within for quite a long time. This trend line, originating from previous peaks, has acted as a strong resistance level that the price has tested multiple times, but consistently failed to break above. Long-standing trends like this, which shape investor psychology, are critical for understanding when a shift in market sentiment may occur. At the moment, the price is once again testing this descending trend line, and these tests have been recurring for some time. However, this latest attempt shows some distinguishing characteristics. Most notably, the price is now forming higher lows as it approaches the trend line, which could signal a gradual strengthening on the buyer's side. Although this resistance has continued to suppress the price until now, repeated and determined contact with a trend line is often a technical sign that a breakout may be near. If the price manages to break decisively above this strong and long-standing descending trend line, it would represent a significant technical threshold being crossed. Such a breakout could trigger not just a short-term upward move, but also a fundamental shift in the overall market structure. Especially if the price starts closing above this trend line, market participants are likely to interpret it as a signal of trend reversal and begin increasing their long positions. This could mean the price may once again target previous high points. Moreover, these types of long-term trendline breakouts are typically followed by strong price movements when supported by high volume. These levels are closely watched by investors and represent psychological resistance zones. If this barrier is broken and new participants enter the market, the price may gain momentum rapidly, almost as if it's been unleashed. This kind of move is often referred to as a breakout rally, which tends to result in sharp upward swings. Should the breakout occur, it is quite common for the price to retest the area, a technical move known as a retest. These retests offer a second buying opportunity for investors. If this test is successful, the upward movement becomes much more secure and sustainable. Therefore, it's crucial to closely observe how the price behaves once it is above the trend line. In summary, while this long-term descending trend line still poses a technical obstacle for the price, each touch of this area is now coming with greater strength, and the influence of sellers appears to be weakening. If the trend line is broken to the upside in the coming days and price maintains above it, the door could be opened to an entirely new phase of upward movement. Such technical developments often boost investor confidence and increase market participation, but looking only at trend lines is not enough. We must also consider other metrics. Stay tuned. Another technically significant structure that stands out on the chart is a broad support zone that the price has touched multiple times in the past, each time encountering a strong buying response. This area has essentially acted as a solid floor beneath the price, with buyers stepping in to push the price upward during every attempt at a decline. Such support zones are not limited to a single price level. Rather, they are often drawn as an extended support box, within which the price is expected to react in various ways before determining its direction. This support box represents a region where investor psychology and market participants' decision-making processes are heavily concentrated. The area has repeatedly stopped price declines in the past and even marked the beginning of upward moves. Investors who rely on technical analysis often view these zones as opportunity areas. Currently, the price is trading near or has once again touched this support box. At this point, it is critical to recall how each previous touch of this area resulted in sharp and decisive upward reactions. These responses were not just minor bounces, but significant moves that affected the price direction in the short and medium term. From the technical analysis principle that history repeats itself, if the price pulls back once again to this support box, which would technically be a healthy correction, it is highly likely to see another strong buying reaction. This is because large players, institutional investors, or serious capital that previously bought in this area may look to re-enter at the same level. This would increase volume and contribute to accelerating the upward price movement. Moreover, when we look at price action below this support box, we typically see long wicks, meaning that even if the price dipped below, it closed the day or the candle above the area, reinforcing the strength of the zone. This shows that the region is not just a support, but a powerful defensive line that the price struggles to break through to the downside. Another key detail about this support box is this. If the price has begun reacting more quickly and sharply with each revisit, it indicates that more and more investors are noticing and valuing this area. In technical analysis, such a region becomes a high-interest zone. This means that if the price revisits this support box again, it will likely be seen by investors as a window of opportunity. Positions taken from such areas tend to be attractive in terms of risk-reward ratio. Since the stop-loss level can be placed very close by, potential losses are limited, while the potential upside is substantial. Therefore, if the price pulls back to this box once again, based on previous moves, a new buying reaction from this region could lift the price back up and possibly strengthen the trend again. Especially if the price bounces strongly from this box, it could serve as a signal for other investors, seen as a don't miss opportunity. The more a zone is tested, and the stronger the reaction each time, the more confidence investors place in that area. To summarize, this wide support box on the chart may be an area that not only retail investors, but also large institutional players are watching closely. If the price approaches or touches this zone again, it is highly likely that we will see similar reactions to those in the past. This offers a valuable clue for anyone trying to understand price behavior. If this region is tested again, a technically golden opportunity may arise. For this reason, investors should monitor this area closely and carefully analyze the price reaction within it. Go ahead and draw this box on your own chart and keep it there. When we look at the chart, we can see that the RSI indicator is currently approaching a highly critical level. This level has historically acted as a clear resistance point, an important technical barrier where the RSI has repeatedly stalled after climbing from below but failed to break through. RSI is a momentum indicator frequently used by investors, and its behavior at such resistance zones helps predict potential reversals, not only on the indicator itself, but also in price charts. This resistance level has previously marked the peak of RSI movements, followed by weakening momentum and downward price reversals. Therefore, a breakout above this level could signal not only upward movement in RSI, but also a potential breakout from the prevailing downtrend in the price. Many technical analysts believe that when RSI breaks through key resistance levels, the price often follows suit with a similar upward breakout. This is a scenario commonly seen during trend reversals. Currently, as the RSI approaches this resistance level again, it appears to be showing a more solid and determined upward movement compared to previous attempts that ended in rejection. This suggests that buying pressure is increasing, and strong momentum may be building in the market. Such situations are often referred to as momentum breakouts, and these breakouts on oscillators like RSI frequently lead to significant directional shifts in the underlying price. If this resistance is broken, it's highly likely that RSI will gain new upward space, move toward the overbought zone, and this rise may create a domino effect on the price. RSI surpassing this level sends a message to investors that momentum is now fully in the bull's hands. This could provide the final push needed for the price to break out of its downward trend line. Technically, these two breakouts, RSI and the price trend line, usually progress in parallel, with one often leading the other. Especially since the downward trend line on the price chart has been intact for a long time and carries psychological weight, a breakout above this line is often seen by investors as the beginning of a new bullish phase. A breakout of the RSI resistance could accelerate the price breaking above its trend line, signaling that the buyers have regained strength and that the price is ready to move higher. Additionally, if the RSI breakout is supported by volume, it will enhance the indicator's reliability and its impact on the price. In such scenarios, the price often breaks above the downtrend line, initiates an upward wave, and then retests the broken area. This retest phase frequently results in investors reopening positions, potentially igniting a new upward trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.